Hi, grade 11s. I hope you are doing well on your side. Okay, so I am going to be going through the income statement in this question. Okay, let's just take a look at what is the required in this question. Okay, so you are provided with information here, and this was for module 10, which is like activity 10.1. Okay, so what are they saying here? What is the information that we need to take into consideration in our calculation? So here they're saying the information was extracted from the records of JJ Stores on 28 February 2020, the end of the current financial year. The partners are Miss Josie and Mr. J. Okay, and then the required here, they're telling us that we need to prepare the statement of comprehensive income for the year ended on 28 February 2020. And then they're saying, what is it that we have to note? Let's take a look. They say some amounts are provided in the workbook. Show all workings in brackets. Okay, so we're only going to do the income statement in this video recording. Okay, so they're telling us that there are some figures that are already in the workbook. Okay, let's take a look at the workbook, how it looks like. Okay, so this is the income statement for JJ Stores. Okay, I can see there are some figures that have already been taken into account. They have the commission income here. Okay, let's scroll down. Okay, the salaries as well as I think depreciation. Okay, it seems like those are the only figures that are there. Okay, so don't forget we have commission income given to us, salaries as well as depreciation. So it means that it might be easy. There might be like we might find ourselves are having to like basically solve a puzzle. Okay, let's look at our information so that we start with the income statement. What is it that we have been provided with? Oh, I forgot. Before we even start going straight into the questions, one of the key tips that I always advise learners to do or follow is like before they even start doing anything on that exam pad that you are using, or maybe you are in a normal exam situation, is to always find out the financial period. So in that question paper that you have there in front of you, then you will just be like, okay, so they've given us information here. They're telling us information was extracted from the record of JJ Stores on 28 February 2020. So this is the end of the year, which means that if the year is ending on the 28th of February 2020, then it would have began the previous year on the 1st of March 2019. So you write this down like on top of your question paper as well as at the top of your answer book, so that you know that whatever transactions you're dealing with, you will just constantly refer back to the financial period that you have been given there. Okay, let's continue with the income statement. So I'm just going to go down and find relevant information. Okay, so here they've given us information and they're telling us this is an extract from the financial records. They have capital all the way. Oh, I like this. So it means what? This, like we are solving a puzzle. I like this. So it means what? If you look at this figure down here, it is what? It is the net profit. As per the profit and loss account, profit and loss account is the same thing as an income statement, just that it's in a general ledger format. Okay, so now it means what? They've given us the net profit for this income statement, which means that I can just copy and paste it to the income statement. Okay, let's put it down there. So if you were doing a normal question paper in an exam situation, I highly advise you to put in the obvious. This is an obvious amount. They've already done it for you. So just going to make it easy for yourself. And then we put it down there. So this is their net profit for the year. So if they've given us the net profit, it means that there is a missing figure that we'll have to solve. We don't know which one is it, but we're just going to keep going for now. Okay, so we have the obvious. And then there is what additional information down here. Okay, it's not a lot like this. Okay, let's see if we can start with the question. So we know obviously that an income statement will always start with sales. So we need to figure out how much are the sales. Okay, we have sales here 998,400. Okay, so we take the sales, we put it. Okay, let me just go up. So with the sales, then I'll do what? Open my brackets. I always assume that there might be additional information that I need to take into account. So I will always do what? Open my brackets. And then see if there is what additional information related to the sales. Additional information related to sales is most likely to be debtors allowances. So debtors allowances is when someone returned goods that they had originally bought, but then maybe they no longer need them, or maybe there are a lot of reasons why people return things, right? So if I'm scrolling down in the additional information, there's nothing related to what? Nothing related to my debtors allowances. So it means what? There is no debtors allowances that I'm gonna be minusing here. So I'm just gonna do this minus zero. You don't have to do this. I'm just doing it like this way because I am teaching. Okay, so I'm just gonna say 800. Yeah, you get what I'm saying. 998,400. Okay, so once we have the sales, then we can move on to our cost of sales. So say cost of sales. Okay. So remember, if you had taken or what is it, your debtors allowances, if you had done something on your sales there at the top, then it means what? You also have to do something on your cost of sales unless it is stated otherwise. Okay, if you are doing the question and then they tell you that they've already adjusted it in the cost of sales but not in the sales value, then it means what? You will only adjust it in your sales and leave the cost of sales alone. But in this case, like usually if you minus your debtors allowances on your sales, then you have to minus what? The cost of sales of the debtors allowances on the cost of sales as well. But in this case, then we don't have any debtors allowances, so we're just gonna put the cost of sales amount as it is in the final column. Let's check. So cost of sales is 665,600. So I'm just gonna take it and put it there, 665,600. So it's a cost of sales, and it means what? We have to minus it from the sales. So I'm gonna put it in brackets. Okay, so now to get our gross profit, obviously you say sales minus cost of sales. So in this case, you have to do what? You have to pause the video and calculate. So if you say 998,400 minus 665,600, what is it that you are getting? Okay, let's do it. So I'm just saying 9. So this minus this, you are doing it on your side. Okay, on my side, I'm getting 332,800. Okay, so now we have our gross profit. So it means what? We can continue to get our other operating income. Okay, it seems like they've already done their first other, other operating income, which is commission fee of 47,725. Let's look at the next other income. Okay, fixed load this. Okay, let's look. Okay, like this. So we have rent income. So rent income, obviously, it is income, right? It's an other income that we are getting in the business. Okay, let's okay, I don't know what I'm doing here. Sorry for that. Okay, so here we have rent income. The rent income here is 117,215. Okay, so rent income. So now I want you to basically, I want to find a way that you can use and it can assist you in your calculations, understanding how you calculate rent income case, because there's like extra information we need to take into account. So I'm just going to use this space here. Okay, so this space here, obviously, if you were like writing down in an actual paper there in your exam, then it means what? It means that you will have to draw a timeline. But in this case, I don't have a timeline. So what I am going to do is that I'm just going to write here. So we know that our financial period starts on the 1st of March. So 1st of March, 2019. That's where the year starts. And then the year ends on the 28th of February, 2020. So this is the accounting period that I'm working with. So to make it easy for myself, I'm just going to do this. Just move this. Okay, just to make it easy. So we know that's the beginning there and this is the end. Okay. And then this is the end. Okay. Anyway, so you get what I'm doing. Okay, so this is the beginning and this is the end. Okay, so in the rent income here, there, I'll show you now. It seems as if we paid in advance. Sorry, we received their income in advance. It means that one of our tenants decided to pay for the next month, and the next month has nothing to do with this current financial year, which means that it overlaps with the next accounting year. You get it? So now we have to take it out from this financial year end. It will only be considered in the next accounting period. So let's take a look at this information. They're telling us that the rent for March 2020 was received and deposited. Take into account that the rent was increased by 875 rand from 1 December 2019. Okay, so there are two critical things that you have to take into account here. One is that there is what? The rent has been received in advance for an extra month. You get it? And then the next thing is that it was increased on the 1st of December 2019. And also, sorry, a third thing again is that it was received and deposited, which means that the entire amount in the trial balance includes a rent for 13 months and not for 12 months. You get it? So we need to adjust it and bring it down to 12 months. You get it? So we need to minus that additional rent that has nothing to do with this year. Okay, so three things. First one is that the rent is in advance. Second thing is that it is already included in the rent for the year. The third thing is that there is an increase also at play here. So we need to debunk all these three things, and then we are able to figure out actually for that extra month, how much was the rent for? Okay, so I'm just going to do this now. So here we know that there is a beginning of the accounting period and then there's the end of the accounting year. And then now we know that there's what? There is increase. So increase happened on the 1st of December 2019. And increase happened here. Okay, so we will do this increase. So this is a timeline there on your book. Remember, you're drawing a straight line there and then you're putting in all these points that I'm highlighting here to make it easy for you. Okay, and then remember here, there is what? They also told us that there is an extra month, right? So I'm just going to add another thing here and say extra month. So the extra month here is for what? Is March. In the next accounting period. So we say the 31st of March, 31st 03, 2020. So this is the next accounting period. Okay, so now that you have this nice thing here, let me just put it in red actually to make it just because why not? Okay, so I'm putting it in red to make it easy for us. Okay, now it's in red. So let's do the calculations here. So our calculations here, our understanding is that obviously we need to figure out the months. So the months before increase. So I'm just going to say before increase. So the months before increase is how many months? So for you, your before increase is from the 1st of March when we open our books all the way to the 1st of December. So you can just count using your fingers. March, April, May, June, July, August, September, October, November. We're not counting December because December's on the 1st. On the 1st is like suddenly a jump. You get it, an increase. So from March all the way to November 31st, 30th. How many months is that? Okay, on my side, I am getting 9 months. So the before increase, it's equal to 9 months in total, which means that the after increase months After increase, then it's sort of easier once you know now that, okay, so you have your before increase month. So it means that your after increase, you will start counting from the 1st of December all the way to, will include March 2020. So that's like 4 months because you say December, January, February, March, 4 months. Okay, so you say 4 and okay. So now it's sort of like we have all the things that we can work with. You get it. So the before increase, obviously, we need to know how much was the rent, and after increase, how much was the rent. So based on the amount that we are given in the trial balance there, that's given us that the amount in the trial balance is 117,000. So it's 117,000 250. So this is the amount which includes an extra month. It includes increase for 4 months. Okay, so now let's figure out how much is the increase. So I'll just say what you know that is for 4 months. I'm just gonna say times 4 times 875. The 875 is for 4 months, obviously. So this times 4 months, I am getting, let me see in my calculator. I am getting 3,500. Okay, so now I have 3,500 of increase. Right. So the 3,500 of increase, I will then do what? My next step now is to just say what? 1,700, 250, the entire amount for rent for the year, minus what? Minus all the total, like all the increase from December all the way to end of March. Okay, so if I minus those 4 months of increase from the original rent amount, I get 113,750. So this is what? This is rent for 13 months without increase. Okay, I had to take out the increase. So it means what? This is the rent now for 13 months without increase. So it means what? It means that my calculations now are easy. You get it? So the easy thing here now, just say 113,750 divided by 13 months. Basically, that's it. Divided by 13 months, and my calculator is giving me 8,750. So the 8,750 is rent per month before increase. So this is what the business was paying, was getting per month before they put in the increase. You get it? Okay, so it means that our thing is getting even more easy. You get it? However, so now we know that before the increase, it was that. However, the extra month that we need to figure out how much was it, it comes with what? It comes with the actual amount of rent plus an increase. So this means what? It means that we say 8,750 plus what? Plus the 875. So now we will be able to figure out how much was paid for March, how much was received for March. So we are finding out that it's actually 9,675. That's the rent that we got for March. You get it? So just by doing this, you are done. So with this calculation, then how are you recording it in your income statement? Let's go up. So in your income statement there, you've done the calculations in the calculation space provided there. So it means what? In your income statement now, the only thing that you are doing there, you will just do what? You will just put in your total rent. The total rent is 117,000 as according to the trial balance. Okay, and then you do what? You minus what? You minus that extra month. It has nothing to do with this current financial year, so therefore it must be taken out. It's an income received in advance. Okay, so if you minus that, then you will get 113,750. So this is the rent income that we received for the next accounting year. Okay. Oh, sorry, for this accounting year. Okay, so the next thing now we need to take into account, let's look if we have any other income that we need to take into account. Okay, I am looking here and sorry for the noise. I'm looking here and it seems like there isn't any other income that I am picking up here. But there are potential incomes here that we are not sure whether they are incomes or expenses, such as your provision for bad debts, as well as your trading stock deficit or trading stock surplus. So I advise you to do them before you even do your totals. So I am going to do my trading stock surplus first. Trading stock surplus or trading stock deficit. How do you do trading stock deficit or surplus? So you look at trading stock or inventory in your trial balance and compare it with what? With the stock valuation amount, and be able to figure out whether is it a loss or is it a profit. Basically, is it a deficit or is it a surplus? Let's take a look. So here, my trading stock is sitting at 134,840. Okay, how much did we actually calculated in our physical stock take? So we did a stock take and we found out that our trading stock was sitting at 130,540. So physically, items that we can touch, feel, and see in the store in total are sitting at 130,540. But our books are saying the stock in our stores is supposed to be sitting at 134,840. So this means what? It means that it's a loss. We are counting less than what our books are saying. Okay, so this is a what? This is a trading stock deficit. If it was vice versa, then it would be a surplus. Okay, so let's see. So how much were the trading stock values? I think what our books were saying is that our books are saying we are sitting at 134,840, but the physical units are saying it is actually 130,540. So you minus these two, and you will be able to figure out how much you have in the store. And okay, it means that basically we made a loss, a loss in terms of our stock. This loss can be maybe there's theft, there's expiry, there's a lot of issues that can go into this. You get it. An extra question that might be asked maybe it's like internal control purposes here. How can a business make sure that the stocks are the same? You get it. But anyway, we're not there. Let's continue. So the other one that we did say that we are not sure whether it's a loss or what is it? It's a profit or an expense. It's the provision for bad debts. So provision for bad debts here, they've given us here, they're telling us that at the beginning of the year, it was 3,936. Okay, so this is what had projected at the beginning of the year. And then during the year, they're telling us that adjust the provision for bad debts to 5% of the net trade debtors. So 5% of the net trade debtors is what is required in this case. Okay, so I'm going to do it here so that we figure out whether it's a loss or a what. So I'm just going to say 5 divided by 100, which means that this is 5%. I'm going to multiply it by the trade debtors. So the trade debtors here is 68,750. Okay, so this is the amount that I am going to reduce my trade debtors with. So 68,750. Okay, so apply this in your calculator. You pause the video and you do the calculation on your side. Okay, let me see how much I am getting. Okay, so on my side, I am actually getting, let me see, 3,438. Okay, so it means what? It means that we projected more, and in reality, the provisions were actually less than what we projected. You get it? So the difference is a what? It is a profit. Okay, I'm going to go back so that you see what I'm talking about. So this is what we said at the beginning of the year we are going to have in terms of our provision for bad debts. You get it? But then as we now at the end of the year, we're figuring out that actually the amount is less than what we initially intended. You get it? So the difference will go straight to our profit side of things. So I highly advise you to, before you even progress with everything, is to do your provision for bad debt as well as your trading stock deficit or trading stock surplus, so that you figure out where does it go. Anyway, let's continue. So here I'm gonna say provision for bad debt adjustments. Okay, so and then I'll open my bracket and say 3,936 minus 3,438. Okay, and then with the difference, then it's going straight to my income. Okay, so this is what I'm getting. And just by doing this, I am done with my income side of things, which means that now I can close off my incomes. Okay. Okay, so this is not coming out nicely. Anyway, it doesn't matter. So now we can close off our operating income. So you add all these three things and figure out how much is your other operating income. I think on my side, okay, I'm just going to continue with what I have now. Just keep it rolling. Okay. And then we are done here. Then we are on our operating expenses. Okay, on our operating expenses, let's work it out. So operating expenses, they've already calculated the first two, and we've already done trading stock, a deficit or surplus. Let's find out what's going on with the sundry expenses. Okay, sundry expenses, it's a question mark, so I'm assuming it's going to be balancing figure. So this is our balancing figure. If it doesn't make sense, I'll explain it shortly. Balancing figure. Okay, so we leave it like that and then we continue. What other expense we need to take into account? Okay, there is insurance. Okay, insurance 21,455. Okay, insurance. Okay, opening 21,455. Okay, let's see if there's additional information related to insurance. Okay, I'm scrolling down in additional information related to insurance. I'm finding it in number 5. So number 5, they're saying insurance include the annual policy for 5,820 paid on 1 June 2019. Okay, so this is what? This is insurance, but then there is what? There is a prepayment. We paid more than what we're supposed to pay. We paid for the next period, like part of this amount. It has nothing to do with this year. You get it. So this is a what? This is a prepayment. So we need to do what? Check out everything that has nothing to do with this year, and then only be left with what has to do with this year from the insurance. Okay, let's work it out now to make it make sense. Okay, so here again, I will advise you to do the same strategy that you were doing when we were calculating the rent income and all of that. So just to make it easy here, the only thing that you're just going to be doing here, you will just put in your before. So your before, okay, let me see. Okay, it doesn't matter. So you would just say, yeah, this year or after next year, it's up to you. So we're just going to say that from the beginning of the year, the accounting period starts on the 1st of March, 2019. Okay, so from the 1st of March, 2019, it's the beginning of the accounting period. And we know that our accounting period ends on the 28th of February, 2020. That's what we know. Okay, and then this insurance policy is paid for what? It's paid from the 1st of June. So 1st of June, okay, 1st of June 2019, all the way to what? All the way to the end of this current financial year. I'm assuming. Obviously, they did say that it's for a 12-month period, which means that the 12-month period overlapped to the next year. Okay, so say go to 2020. So this is the end of the year, which means that However, that amount continues on, right? So say from the 28th of June, 28th of June, February, wow, 28th of February 2020, all the way to what? All the way to, I don't know, maybe I'm assuming all the way to the 31st of May. It's 31st of May, 2020. That's when this thing will end. Okay, so if you say from June until 28th February, you can calculate with your fingers. So it's June, July, August, September, October, November, December, January, February. So this is equal to 9 months. So it's 9 months. Okay, let me shut up and continue here. I'll go back to the point that I wanted to say. And then from from February. So this February, basically here, this should have been just like the 1st of March, not to confuse you. So the 1st of March 2020. Yeah, now it makes sense. Okay. So March, April, May. This is just 3 months. You get it? So this is basically now I've already divided this amount, this annual premium, to make it easy for you. So you just need to note that out of this 5,820 that is paid in advance, it's the advance amount is only for 3 months. You get it? 9 months of this premium has already been used. Yes, 9 months of it has already been used. The remainder of this premium is only for the next 3 months, and the next 3 months are coming in the next year. You get it? So now you have what? You have the months. It's so easy. So now you will just say what? You just say that entire premium of 5,000 something something. Okay, let me make space. So say 5,820. And you just say times 3 months, because we want to figure out how much are those 3 months that have nothing to do with this year, divided by 12. You get it? And then just by dividing it by 12, you are able to figure out how much is the extra 3 months. And this is what I'm getting. So now let's look at how you are going to represent this amount. So this amount, remember, it is a what? It's a prepayment, has nothing to do with this current accounting period. So we will just do what? Minus it out from our current accounting period. So just say 1,445. Yeah. So this is what we have now here. Okay, we are done with insurance. Let's move on to the next account. Okay, I'm scrolling up here. Okay, the next thing now is packaging material. So packaging material, 23,100. So packaging material, let's look. Packaging material. Okay, and the packaging material, 23,100. Okay, is there additional information? You see, like the process that I'm applying. It's like every time I put it, I ask myself the question, is there additional information? And then I go straight to the additional information. Find a rhythm or find a strategy that works for you, and then just keep it going. Okay, packaging material. So here they're telling us that out of this entire packaging material, 3,600 of it has not been used. So if it's not been used, it means what? It means that it's going back to inventory and it will be used next year. You get it? So it has not been used. We're only focusing on expenses here. It's not an expense for this year. It has nothing to do. It has not been used. That's all I'm going to say. So we say minus 3,600 here because it has not been used. We're looking for the expense here. So if you minus these two, you are getting 19,500. Okay, so we're done with packaging material. Let's move on and find the next one that we need to take into account. Water and electricity. Okay, water and electricity. Okay, it's 20, let me see, 25,320. Okay, 25,320. Okay, let me put it water and electricity. 25,320. Okay, we don't know if there's additional information. So now it's like, let's look at additional information. So additional information for water and electricity, I am looking here. Okay, yes, we have it here. number 6. So number 6, they're telling us that water and electricity for February. So this at the end of this accounting year, on that final month, we did get the bill for that month, but we have not paid for that month. You get it? We got the bill. This is how much we're owing, but we have not paid it. And since we have not paid it, it's a what? It's an accrued what? Expense. Should have been paid, but has not been paid. You get it? So accrued expenses are what we should have paid, but we have not yet paid. Okay, so we have to add it because we're adding it because it's a what? It's even if we haven't paid it, we're just gonna assume that it will be paid because it's an expense that should have been paid, and it's an expense that has to do with this current financial year. It has nothing to do with the next accounting year. So the assumption is that anyway, it will be paid. Whether it's paid next year or this year, it doesn't matter. But it's related with this year. And the matching principle says what? We have to take it into account this year. So say 27,470. Okay, now let's see if we have any other expenses that we have to take into account here. So we've taken care of adjustment 1, we've taken care of adjustment 2, we have not taken care of adjustment 3. However, adjustment 3 will only be taken care of it later because this is what? Interest on loan. It has its own space. Okay, and then okay, we're not doing D because D information is related to partners, distribution, and sharing of profits. So we are done with our expenses side of things here. So it means what? It means that we can move on to our. Remember, I can't finish up and calculate how much is the total for my expenses because we still have sundry expenses that we need to calculate and find out the balancing figure. So I'm jumping the gun and moving straight to my interest income. Sorry. So interest income. Okay. So let's figure out how much is the interest income. Okay, so interest income, I am going up to find out if there's information for interest income. Awesome, found it. So they've given us what is it? Interest income here. So interest income here, they're telling us that it's 8,100. Okay, 8,100. Okay, let's continue. Is there additional information? Now you know the drill. So it's always asking yourself the question: is there additional information? Okay, so I'm at number 7, and there is additional information for interest income. Let's read it. Okay, I'm changing my color because it looks the same. Okay, so here they're telling us that interest on fixed deposit is not capitalized. Okay, and then interest for the last quarter for this year, financial year, was not, was not yet received. So we should have received this rent. What is it? This yeah, this interest income, but we have not yet received it. Okay, so it means what? We need to take it into account. We need to account for it. We should have received it, but we have not received it. So this is a what? This is an accrued income. Okay, it should have been received, but has not yet been received. So it's an accrued income. Whether they give us next year or not, the fact that this amount, this income was for this year, it should have been received this year. We will assume, you get it, as per the matching principles, that it is for this year. Okay, so I'm just going to continue and check there at the top. Okay, so I am going all the way up, finding out the extra information that I need. So here they're telling us that fixed deposit for bulk bank, 9% per annum, and it's 120. So we just say 120,000 times 9%, and you figure out how much that amount is. Okay, so I am opening my brackets here and I'm saying 120,000 times 9 over 100. Okay, and then I get how much. Let me calculate on my side and figure out how much is this one here times 9 over 100. Okay, I am getting 10,000 800. Okay, just a second. Just want to double check something here. Think I am missing something on this question. So I just want to check on my side here quickly. Okay, found it. Okay, let's check. Okay, I think I just one information here. Okay. Yes. So now that we are doing it, so this is what? This is what we should have gotten per year, per annum. Okay. So the per annum amount that we should have gotten in for the full year for this fixed deposit is 10,800. But then here they're telling us it's for the last quarter. They say for the last quarter of this financial year has not been received, which means that we have received the other quarters. So if you know in terms of quarters always think of terms. So you have the first 3 months of the year is the first quarter. The last 3 months of the year is what? It's the last quarter. So here you can just say, okay, so we got 9 months. You get it? We haven't gotten what? We haven't gotten 3 months of the year. So we just say times 3/12. Okay. So now say that 10,800 times 3/12. And then the amount that we're getting is 2,700. Okay, so the 2,700, you will add it with the other one that we had already gotten here. So this one plus 2,700. Okay, and then we're just gonna add these two together. So you add these two together, and then we are getting 10,800. Okay, so this is our interest income. Okay, so we're done. I'm gonna skip profit before interest expense because, like I said, we are solving a puzzle. You get it? So we don't have all the information to figure out how much it is. So I'm just saying interest expense down here. So interest expense. So now with my interest expense, now I am just going to use additional information that we have been given. So the additional information that we are given there, remember we've taken care of all the other additional information except for this one. So here they're telling us that interest on loan is capitalized. Okay, so it is capitalized, which means that it is added on to the balances. Okay. It's added on the additional balances. So if it's added on the additional balances, then it means what? It means that we will have to now like find a way on how to calculate it. So how are we going to do that? So we're saying here that given us that it's the opening balance, it's 374,600, and then we paid during the year that we made a payment, and this payment had what? Included interest. And when we paid that, at the end of the day, yeah, somehow like what we were owing was now sitting at 327,000. You get it? So now we need to do what? We need to figure out how much at the end are like out of what we paid, how much is related to the interest for the year. So all you're gonna do, this is easy, guys. I get excited when I see something like this in an question paper. It looks difficult, but once you do it and you get a hang of it, it never changes. Like examiners, they use the same tricks over and over again. So as soon as you figure out the tricks and crack the code on how the tricks are used, this becomes so much easier. So you just say 374,600, which is the opening balance, minus 86,400, which was the payment that was made during the year. And then you minus what? The closing balance also. Minus the closing balance, because now we want to figure out like what's going on here. What is the difference? You get it? And you pause the video now and you do the calculation on your side. On my side, in my calculator, I have already done the work and I'm getting 38,800. So this is the interest expense from the loan that is what? It's capitalizing interest. Okay, so now this is where we are sitting. Okay, we have everything here that we need to actually now complete the entire income statement. Okay, let's see if we can just complete the income statement now. Okay, so now we have everything that we need to finish off the income statement. Let's find a way on how we can do it. Okay. Okay, so let's do the calculation here. Wow, I'm so surprised. Why is this not coming up? Okay, it's not coming up. So what I'm gonna do, okay, anyway, it's not coming up. So you can see there you have net profit, right? So with the net profit and you have what? You have your interest expense there. So now what are we looking for? We are looking for the profit before interest expense. So what you would do if you find a question paper that looks like this one is that all you have to do now is to do what? Is to just say net profit for the year. The net profit for the year plus what? Plus your interest expense. So basically you are working backward. You get it? So you have a profit that has already been given to you and you calculate it to interest expense. So now to get the profit before interest expense, you just work backward. So if you say that 311,000, which is your profit, plus your 38,800, you should be able to get 349,933, which is your profit before interest expense. Okay, so let's go up. We're gonna continue. Let me see if I can just use bold so that you see this is a different thing. So we calculated our thing. So now to move back now to get our operating income. To get our operating income, we would then do what? We'll minus the interest income. We minus it because for us, because the usual procedure is to add interest income, you get it. But because we're working backward, we have to do what? We have to minus it. You get it to get the raw amount before it was added. So if you minus it, you get 339,133. Okay, I'm gonna put bold because it's a unique number that we got. Okay, so this is our operating income that we're sitting with. Okay, so it means we are continuing with our working backward thing. Okay, for us to continue, let me see, we had to calculate our other operating income here. So other operating income, we added all the incomes that we got, 47,725, 113,750 plus 499, and we got 161,974. Okay, so this was our other operating income. So which means that we just add these two together, 161,974 plus 332,800. Add this together and it gives us our gross operating income of 494,774. Okay, let's see. I'm highlighting this. Okay, so this is what I have now here, which means that I love this. Activities like this, it just make me so excited because then that's where like the brain gets excited to do all the other activities. Okay, let's continue. Okay, so now I have to basically, this is what I have now. The only thing that is remaining here, I just need to get my operating income for me to be able to get my sundry expenses. You get it? So to get that, I'm working backward. I have my gross operating income here. You get it? So for me, the only thing that you're doing, you just say gross operating income minus your operating income here. So this minus this. Let me highlight it. Okay, I'm highlighting this here. And if it doesn't make sense, just take your time and go through the video again, but make it slow motion, basically, a zero point 0.2 speed. Yes. So if you use a 0.2 speed, then things will just make a bit more sense. Okay, minus those two amounts, and I think I am getting 155,641. This is my operating expenses. So operating expenses are sitting at this amount. So once you have your operating expenses, this becomes so much easier. So the only thing that you have to do now with operating expenses, for you to get your sundry expenses, the balancing figure, you just minus these amounts, all these are expenses from the 155,641. So I did the calculations in advance to save time, and I got 114,446. Yeah. And just by doing that, you are done with the activity. Like, you got all your marks. Income statement can be easy, it can be challenging, but for you to find it easy is to do activities, is to practice. The more you practice, the more your level of confidence will rise. Okay, I think that's it on my side. If you have questions, don't hesitate to just reach out anytime. Otherwise, that's it. Thank you so much for tuning in.